Value of import. 1. Introduction to import value calculation. This article defines how to calculate the value of imported goods for the purposes of VAT. This value serves as the taxable base upon which VAT is applied when goods enter the state. Understanding and applying the correct import valuation is critical to ensuring compliance with VAT laws and avoiding underpayment or overpayment of tax. 2. Primary method using customs value. The default and primary method to calculate the value of imports is to use the customs value as defined under the relevant customs legislation. The customs value is the official value determined by customs authorities when goods are imported into the state. This value typically includes the invoice price of the goods, purchase price, insurance costs incurred to cover the shipment of the goods, freight charges, which include the cost of transporting the goods to the state, any customs duties or fees payable to customs authorities upon import, any applicable excise tax payable on the goods being imported, for example, for tobacco, sugary drinks, or energy drinks. Important exclusion: the VAT itself is not included in this calculated value. VAT is applied separately to the total import value. 3. When the customs value cannot be determined. In situations where it is not possible to determine the value of the imported goods using the standard customs value method under the primary rule, an alternative valuation approach must be applied. These alternative valuation methods are specified in the applicable customs legislation. Alternative valuation methods could include reference to the value of identical or similar goods, using a deductive value method, which calculates the value based on the resale price within the state, adjusted for costs and profits, using a computed value method, which estimates the value based on the production cost of the goods, including materials, labor, and overhead. The exact details of these alternative methods are governed by customs legislation, ensuring consistency between customs valuation and VAT valuation processes. 4. Importance of accurate import valuation. Applying the correct import value ensures accurate VAT assessment at the point of import, consistency between customs declarations and VAT records, prevention of undervaluation to avoid tax or overvaluation resulting in excess tax payments. Businesses involved in international trade must ensure their logistics teams, customs agents, and tax departments correctly apply these valuation rules. For more details, contact us.